According to the past cycle of Bitcoin, how will the next market develop? If you are interested in this issue, please follow me. Let's take a look at Bitcoin. If we use halving to divide it, we can find out. Let's first put our period of time before the halving period was marked with a white line representing the halving period. We have drawn 2 consecutive rounds of halving. Our next halving will be around April 2024. According to the current speed of block production, the speed of block generation has actually increased. At least faster than everyone expected. Originally, everyone thought it would be in mid-April. Now, based on the current speed of block production, it is very likely that we will be in the middle of April. At the beginning of April 2024, we will usher in our next halving period. So we can measure the time from the next halving period to the present time. It is about 210 days. Of course, there will be some small gaps. However, if we calculate based on 210 days, I believe there must be a lot of guiding value. Well, we need to know how this market will go, or how it might go. We might as well review it a little bit. We are reducing. In fact, it is not difficult to see what kind of market we have gone in the 210 days before the half period. In fact, it is not difficult to see that except for the Black Swan incident on 312. Of course, that was due to the impact of the new crown epidemic. Then, all the financial markets and all the targets, all have been impacted to a considerable extent. Especially, I believe everyone still remembers the US stock market. If we exclude this Black Swan event, other markets are just oscillating. It is oscillating within a relatively narrow range. Of course, this narrow range is better than the level of the weekly line. Then we can review it again. If there is another round, we will push forward 210 days based on the halving period. Basically, it is also oscillating. But the amplitude of its oscillating is relatively small. After the oscillating, we started a wave of rising, and then we fell back. If the pin is inserted, we are basically in the same position. So we can unify. Basically, we in the first 2 rounds. It was within the time period of about 210 days before the halving. Our market was oscillating, that is. It was oscillating. Even if we look at the price. In fact, the current price of our current market is I believe it will be not far from our price when it is halved. It is around this price. Maybe around 26,000. And we will be in this position. If we follow the previous market, the premise is there is no Black Swan event. So judging from the current market trend, I think the possibility of shocks is relatively high. But if we cut down the level or look at it from other levels, from a technical perspective, in fact, the possibility of going short, for example, the possibility of shocks and falls, seems to be relatively large at present. How can I say it? Let's take a look at DXY now. This DXY is the US dollar index. The US dollar index is similar to the market of Bitcoin or the US stock market. The market generally presents a reverse correlation, and those correlations are very strong. How do you say that? Of course, the correlation has taken an absolute value, so positive correlation is the inverse correlation. Its absolute value is high and the correlation is high. It means that the degree of their fit does not necessarily mean a causal relationship. But the degree of fit is very high. You can see that basically our previous rounds of large-scale rises are all related to the large-scale declines of DXY. Basically, the above is consistent. For example, this period of our market. This period of DXY has experienced a relatively violent decline. And this period of market DXY has also experienced a relatively large decline. And our previous period of market, we can compare it slightly. Right now. Of course, we are now near the trend line, which we can clearly see by looking at the picture, but let's review our decline. Its starting point is at the end of May and the end point is mid-July. From the end of the month to the middle of July. What kind of market is Bitcoin going? In fact, this period is this period. It is at this position from the end of May to mid-July. What's more, it's DXY's falling market. Let's take a look at the period of DXY's decline. It lasted from mid to early March to mid-April. It stayed at this position until mid-April. It is a perfect fit at this position. That is, the rising market of Bitcoin and the falling market of DXY are perfectly matched together. Of course, there is another time we have not resumed the market. Let's take a look at our first wave of rising, and this wave will end in February, and start in February. We will start from September, October, and November. If we say that we want to start from a relatively violent decline, it should start from November, which will be more reasonable in early November, until the position at the end of February and the beginning of February. Let's review the market of Bitcoin at that time. Basically, it was at the bottom of us in November and early November. And then it went all the way to about mid-February, early February, and mid-February. The place is our previous wave of market prices. So Bitcoin is highly correlated with DXY. And it is inversely correlated. Now we are here again. If we talk about Bitcoin, it will see a sharp drop in the market. Then I believe that DXY will break through our trend line. If it breaks through our trend line, I believe that Bitcoin will usher in a sharp drop. On the contrary, if the trend line falls back, we will start another wave of rise. From the current technical level of Bitcoin, it actually breaks through the DXY breakthrough. And the probability of causing Bitcoin to fall is relatively high. So let's take a look at the daily line level. In fact, from the daily line, various methods of judging trends have gradually shifted from bulls to shocks or bulls. The trend has already disappeared. How to say it? First of all, we can look at the way we can use the high and low points to judge. Well, there are low points here, and then high points, low points, high points, high points. And low points must be 1-to-1. If we say if someone draws a picture that is not a pair, then he must be wrong. For example, this side is a pair, then this side is a pair, and this side is a pair. So is this a low point? Isn't it? Because this didn't produce a pair. Then why can't you say this is a low point? Because it hasn't broken the previous low point. If it breaks, then it's definitely not a low point. If we want to confirm that it is this low point, we must see that the market breaks through this previous high before we can say that this is a low point, so we say that there is a low point here, which is absolutely wrong and absolutely wrong. If we look at it from the perspective of the market, now we only need to take it for granted that our way of high and low points is a relatively loose method of judging trends. In fact, we are already very close to the deadline in front of us. If this place is broken, then the bullish trend definitely does not exist. Going short or going volatile is hard to say. But as long as this point is broken, the bullish trend must not be there. If we combine other analysis methods, for example, the moving average has already gone short. If it plummets, it goes short. Or it means pressure, support, or trend line. The trend line has been broken. In fact, we must have a trend line when the bulls are rising. We don't even have a trend line now. It can be explained that this wave of our rise has basically ended. It is not certain that we are going to fluctuate or go short. But this wave of falling below. In fact, we have to go long again. We have at least 2 or 3 months. It is absolutely impossible. Well, let's cut the build up a little bit and cut it to 4 hours. From 4 hours, we can see that its rebound is actually very weak, very, very weak. We were at this position in the early stage. And it had an exchange, including the support in front of us. And then this place of resistance also creates resistance. And then we follow up. Here is the resistance. After we fall. Wait a minute. After we fall, it creates resistance again at the original position. After falling, it rebounds. But the resistance, especially the degree of its rebound, is so weak. In fact, if we from a small level point of view, it is not a good opportunity to go short against this place. I will also observe it. At present, it seems that the rebound is very, very weak. That is, the support of 25,000. It has become very weak. If you also want to participate in this trading opportunity, you are very welcome to click on the Bybit link below any of my videos. Now as long as KYC deposits $100, you can get $1,000 worth of Bitcoin contract positions for free. You can choose long order or after you select the empty order. It will help you open and make money. You can withdraw coins and lose money. It's okay because this is a free position. You are very welcome. You can help me like, subscribe, share, and turn on the little bell, which is the biggest thing for me. Thank you very much for your support. Bye-bye.